Hello, this is Cryptolyze. I hope you are well on this Wednesday, 3 January 2024. We meet today, like every day, to talk crypto, to talk BTC, and to talk macroeconomics. It starts right away. We're going to start with some news that isn't necessarily positive. I'll explain why. We have Jim Cramer, who is a well-known and recognized analyst, so to speak, who is more of a show guy, and who often gives analysis on CNBC. And he's a person who's very controversial for a number of reasons, which is that usually he's wrong. Often, even very, very often, and in relation to the crypto community, and in particular in relation to BTC, we will say that often Jim Cramer has compared Bitcoin to a Ponzi, said that Bitcoin was dead many times, and to every time he said it, we systematically went upwards. And the only times he said that BTC was rather positive and that you should buy it, that was when we had bearish breakouts. And there we find ourselves with Jim Cramer, who, live, explains to us that Bitcoin is making a remarkable comeback, and that it is a technological marvel, and that it is here to stay. Understand that we are in this process where we have a personality in the middle of a TV show specializing in stock analyses who, precisely, explains to us that we cannot kill BTC. And that it even defines that Charlie Munger, who was Warren Buffett's associate and who died recently, could not really see the interest in BTC, and this is a bit to justify himself saying, well, even me, little Jim Cramer, I couldn't see it. But what is interesting to see is that we have a figure that is being created. Is it right? I turned my coat around. Was he paid to say it? This is the big question we ask ourselves to know that we are clearly in a media manipulation at the moment to push the visibility of Bitcoin with mainly the validation of ETFs, which will normally take place this week before January 10th. In any case, this is what all analysts know, that the final date of validation of the SEC for that of BlackRock, which is the most important, and all the big ones like Fidelity, is in March. There we really especially have ARK Investment, which arrives at its final state, and therefore if we do not validate ARK Investment by January 10th, that means that it will be refused for ARK. They will have to rest. We will start again on a cycle while waiting for March. But nevertheless, it is true that we have a magnetic pressure around Bitcoin, and the fact that we have Jim Cramer talking to us about it, that still gives us a little warning. Then we have the acceleration of Bitcoin yesterday, which pushed us to almost 46,000, which is a little more than 45,800, which is to be driven. 73 million shorts. I spoke to you about it yesterday in terms of liquidations, and that clearly shows that in fact it was also a desire to clean up this part. We saw precisely on Kingfisher yesterday the cleaning that took place. And what is interesting to see is that we are starting to have analyses carried out on it, and they explain that the valuation, well, in any case, the upward acceleration, is linked mainly to short squeeze, something I'm not necessarily. Okay, we also mainly saw that we had the CME in which we had a future that was being put in place. CME, I remind you that it is the Chicago Mercantile Exchange, which is generally the financial tool for institutional investors to be able to expose themselves or not to crypto and BTC, and in which we saw a strong injection of open interest. So that means that we use levers on the future to be able to push the price upwards. And my question is why I think we will have the answer very quickly. I also spoke to you on Monday about the notion of technological bubbles which are being created around AI. And I think that this is the case, and it is and also turning on a lot of analysts who are gradually realizing the weight of artificial intelligence in technology, and in the valuation in particular of the NASDAQ and the S&P 500 at the level of USA, and that it could be a strong second golden age in terms of USA, a bit equivalent to the .ohm, without necessarily the bursting of the bubble, but before having a bubble bursting. That implies that we have a bubble forming. So that means bullish cycles from 1, 2, 3, 4, 10, 3 to 5 years. And there you have it. We are perhaps in for a few years in which artificial intelligence will take an increasingly important part in technology, and behind it in the valuation that stocks will have around this technology and the valuation of artificial intelligence in the effective margins of companies and therefore necessarily their intrinsic valuation. So I think I will certainly do a specialized video on the general narrative of artificial intelligence, not just on crypto, but on macroeconomics because it is really very important. In terms of the PMI, I told you that yesterday we had the manufactured PMI which we had to monitor. We see that it is a little below. Clearly the market has reacted. If we look at the S&P 500, we see that we took a little slap in the face. Well, it's still very light. We still swallowed part of the candle. But we went below 4,800. And we are in the process of instantaneous below 4,800. So that implies that we are potentially reaching the level that we have defined. Yesterday, so the 4,650 there, we will potentially have a good start to strengthening our position. If you ever accompanied this movement and you took profits or not yet enough profits that you think we can get a little higher, it could be an interesting area. What really interests me is to see that the VIX is still at its lowest, so there is clearly no concern at the market level. If we look there, we have nevertheless made an 88th. We is redirecting towards a strengthening zone which is rather classic, and we have a VIX which is relatively flat. We have an upward acceleration which is truly parabolic in relation to this type of asset. Of course, when we're used to crypto, we say to ourselves that it's relatively flat, but understand that it doesn't usually happen like that on the traditional market. So here we are really expecting a breather at the level of the S&P 500, except that the market, once again, the VIX is relatively flat. Reminder of the VIX, it is the volatility index of the S&P 500 overall. It is the options which allow you to hedge if you ever have a breakout at the level of the S&P 500. The lower it is, the less it is expensive. The cheaper it is, the fewer people are interested in buying it, okay? So the fewer people there are who are covered in the event of a bearish breakout, and therefore the more liquidation there can be. And there, the more we have a market that is at risk. What also interests me is seeing the NASDAQ. The NASDAQ the same, we made a new 88th. We still had a relatively bearish week here, which is consistent with what we see in relation to the S&P 500. For me, the truly assured level will be the 15,800, 16,000 priorities, but 15,800 behind with the fuse. Will it be redeemed or not? This is where we will actually have a signal to tell ourselves whether we will have a retracement. Do I see the NASDAQ retraced much more? Yes, we can get 14,850 with a little passage on the 15,000, but it is still too early to be able to determine that. In any case, I think that we could have a January, February, March, rather of breathing at the level of the S&P 500 and the NASDAQ, which would be rather positive for position reinforcements, and which would rather be also coherent by compared to what we could see on BTC. So BTC will quickly come back to where we are because it is very important to take a little step back. We have a break. We have an acceleration which is quite good, and it is precisely important to take a step back from the situation in which we find ourselves. We know that we have reached a critical level, which was the 44,500. We know that we have broken the 44,500. We hold the 45,000, and the next targets remain 48,500, and here 51,500, 48,500, because here we are going to get the liquidity that is before the fall. From Earth to Luna, which would be rather logical in terms of retesting. And this is an area which is going to be very difficult to pass, okay? So even if we pass, there is a good chance that it will just be a strand, and then we will get swallow. The idea I have here would be a hypervaluation at the time of the announcement of the validation of ETFs by the SEC. At that moment, we would have a candle which would perhaps make 5, 6, 7, 8, in which we would tap into this area there to then reevaluate because we will not have an immediate liquidity injection which will take place, and inevitably we will have people who were waiting for that and who in fact will simply sell in spite and in denial. So that is why at that moment we will buy back when we go to retest zones. Whether it is this gap there, or whether it is a little bit lower, we will discuss a little bit later, but it is important just to prepare yourself for what could happen this week or next week in terms of volatility. Because that it's going to be something that's going to be quite aggressive. You just have to be prepared for that. So we're going to zoom in a little more. We're going to see that we have a ranging zone which has taken place, rather classic breakdown of the ranging zone. We are rather in a form of retest here, which seems to me to be a little weak, okay? I would have liked to retest the 4,150 at a minimum, perhaps 4,200 or even perhaps a little higher to make a bearish continuity. To go and retest the lower part, here once again a little bit lower. But if we step back a little further, we can still see that we have hit the top of the range well, a very nice bit. So the question to ask is this retest sufficient? Are we going to be more in a form of ranging, which will take place like this with a form of contraction before being able to go up or down depending on the news? I think that there we also have the tension which is carried around the ETFs, There we have quite little news. We are really in the home stretch. In any case, January 10th is in 7 days maximum. We know that generally it happens a little before. We can hope for the weekend, so I think the market will wait. I don't actually see an overreaction unless we find ourselves like the upward movement that we saw there, in which we have an injection of open interest on CME. So that means that we have institutional investors who are trying to push the price upwards. Once again, don't forget, we are trying to push the price upwards. It all started with fake news. We have strengthened communication around that, so we always pay close attention to these positions, whether they are in spot, whether they are in future. We cover them with a stop loss behind, and perhaps in spot we ask ourselves the question whether we put in place an edge or not. As a reminder, an edge is a position that allows you to compensate if we ever have a bearish breakout that is too significant. It depends on how you manage your spot and how you simply manage a retracement of the price. Is it whether you are bad or not? Do you need to edge or not? Personally, this is not the case, and I will not be covered if we break bearish because I am ready to buy back. Once again, I don't sell this market. I'm getting ready. Quite simply to buy again if I have the chance and opportunity. I'm already well into the boat, but that doesn't mean we're always ready to do more. Another small point which concerns me, and do not hesitate to tell me what you think in the comments, but that is the establishment of the ratio between liquidity. Therefore, all stable coins divided by the entire market, therefore implied what is the share of stable coins in the entire crypto market. And next to this small curve that we see here, it is the injection of liquidity, so it is the totality of the liquidity in stable coins which are injected, therefore USDT, USDC, DAI, the main ones in which we see that we have a progression. Therefore, we do have a continuity of liquidity injection, something that we began to see at the beginning of 2023, which is in fact this period of acceleration. We are going to take up the little pen again, but which is this period of acceleration delay with lateralization, so no one was interested. And there we actually see an injection of liquidity again. So we have a return of liquidity on the market, which is rather consistent compared to what we saw at the beginning of 2020. Although, on the other hand, we are still relatively far from what we were able to experience in 2021, which is still this massive liquidity injection for me. It would be more something that would resemble an acceleration of this style. So as long as we do not have that, for me, it means that we are not in bull run premier. Second info is that we have a price of the stablecoin place in relation to all cryptos, which is not coherent. To have something that is truly bullish and in a phase of hyperacceleration, you need to have more liquidity than assets. So that implies that the ratio, which is this curve here, must be inverted. That means that this ratio must start to rise again. That means that I must have more liquidity than assets. So I must have this ratio which goes up, and that alongside I must have a liquidity injection taking place, okay? It's important to have both. It means having this part which is pushing, therefore always more liquidity, and behind the ratio which is pushing. So that means that I have the price which rises at the same time as the liquidity, and that I even have more liquidity than the price, because at some point I will have the flip which takes place here. And that's where we'll really see a big 88th, and that's where we'll see after taking a profit. We can clearly see the outflow of liquidity which has taken place, and behind it a very, very strong reacceleration in the ratio between the two. So that means that we had crypto prices which collapsed because we had a massive sale. This sale led to an increase in the share of liquidity in the entire total market cap. And that is where we generally take profits when we are in bull run. It looks a little like that, in which we have a form of chopper, where we have liquidity injections, small profit taking, liquidity injections, transfer of liquidity to assets such as, for example, BTC, Ethereum, etc., or altcoins, liquidity injections, the same, transfer of assets, and so on. And as long as we haven't actually done that, that means we're not really setting up a bull run. We'll have to wait. Again, I will take the time to come back to this in another video to really be able to give you all the elements. But it is really something that is interesting to see the relationship liquidity and price valuation, because they are really two things that are linked. The more liquidity we have, the more capacity we have to be able to value assets, the more we have. Valuation of assets, the more we have an increase in liquidity. And this is where, in fact, we have a cycle which is set up, and that is mainly the bull run. It is a purely liquidity cycle that it will have to be monitored. In terms of order flow, in this case, we have the positions of the top traders which have calmed down, which is rather classic. And above all, we have the funding rate which has also calmed down. So we have a good overreaction of the market, hence the delay that we saw here. We indeed have liquidation, which we talked about earlier, which is rather classic. And we see that we don't have any shorts that are in place. Okay, on Kingfisher we can clearly see the liquidations, no shorts present. We have here long ones which are very present, and the element which is important for me to note, it is really here. I did not talk about it yesterday. It is the CVD which are present. CVD spot that it's been a while now where they're almost flat. Okay, they were in a form of lateralization, so that means that it was purchased, which is rather logical when you look at it. And what's interesting, because it's something that we find several times, it's really these triangle patterns, where a compression triangle here in which we have a bullish breakout, compression triangle, bullish breakout, and this is something that we have found several times, therefore at the level of BTC, at the level of certain altcoins. So this is something that we will have to monitor in particular in this cycle, and in these cycles of really preparing news, in which we could still have patterns that could come back in this style. But we see that when we cross it with CVD, in particular the spot, we see that in fact we still have signals which are rather coherent in relation to what can happen, especially since it was reinforced before by perpetual over this short period. Afterwards, it is true that these are areas which are a little complicated because they are holiday areas. At the end of the year, the CVD are less marked. So what will interest me is to note that we still have a lot of long ones waiting here, and which correspond exactly to the retest zone that we could have in the 43,800, which is really the strong resistance zone in which we could have a small wick to once again validate the rebound. So that implies that here we would still have a bearish breakout to go and look for this zone here to recover all long liquidity for then. Either leave there again with an announcement from the SEC, or an announcement from the SEC which is not necessarily positive, and therefore at this time would be bearish to seek lower areas. This is a bit short-term what we expect. Once again, be careful with these types of events. We will have a lot of volatility, and you will have to protect yourself as much as possible. We meet 13:30 to talk about RNDR. I'm going to add something to the last video because it's important given that we have a big short-term valuation, and we're going to have to ask ourselves the right questions. And if you like the daily, don't forget to leave me a like and a comment to support the channel, and that makes me very happy. I'll see you later, 13:30. If you want to train and really enjoy bull running, it's simple. There is perfect, complete, free training available. It's through an educational journey that teaches you everything about blockchain, crypto, investment, technical analysis, and trading. All this for free in comments and descriptions. You have exercises, multiple choice questions, modules, videos, guides, everything to support you in your progress.